I just made over $2,500 in a one-day trade on SPY. I opened up an SPY position by selling an option, and this is going to be basically a 0 DTE trade, or essentially a 24-hour trade that I want to go over and teach you how you can do this yourself, because trading SPY is truly all that you need. Yes, trading other stocks can be exciting and there's lots of volatility in the market, but truly you can make $5,000, $10,000 a week by just trading SPY. And this position right here kind of proves it. $2,520, position that I opened up 1 hour ago, expiring on April 1st. And today is March 31st. So let's go over this trade on SPY, how you can open up this trade yourself, as well as how a small account can open up a put position or a sell put position on SPY also. Now, the reason why I like SPY is it has built-in diversification. So SPY is the S&P 500, has 500 different companies inside of it, and those companies compromise into technology, healthcare, communication services, consumer defensive, financial services, industrials, energy, and so on. So this is built-in diversification. You don't have to have 10, 20, 30 stocks in your portfolio. You can just trade SPY and focus on one ETF, because this ETF has lots of stocks within it. And some of the stocks that it has within it is Apple, Microsoft, Nvidia, Amazon, Meta, Tesla. So it has all the stocks that we're trading anyways. So let's talk about the 0 DTE mechanics and why you would open up a 0 DTE trade. As you guys know, right now it's a very choppy market. So if there's more volatility in the market, opening up positions that expire 30 days, 2 months, 3 months, or even 1 week out can be risky, since there's just a whole lot of volatility. And specifically, let's say there's an event coming up. Like one of the events that I'm looking at is April 2nd, tariffs. So if that's good or bad, either way, it's going to impact the market a lot. And let's say that I don't want to go through April 2nd. I want to wait and see what happens. Well, you can use a 0 DTE option or daily expiration. And that's what SPY has, which is amazing. It's amazing that SPY has daily expirations, because you don't really have to even hold overnight. You can open up a trade in the morning and they can expire on the same exact date. So you don't have to go overnight into a position. Now, this position that I opened up specifically does expire on the next day, but still it's going to expire on April 1st, and it's not going to capture in the April 2nd tariff event. I'm going to show you how to sell a put option on SPY. I'm also going to show you how to create a small account trade on SPY if you don't have a lot of capital. But first, I want to talk about timing this trade. And the most interesting thing is,
when the market opens up, it's unlikely to fall 1% after 10 a.m. Okay, listen to that one more time. After 10 a.m., if the market is up 1%, it's unlikely to end the day at flat. If it's down 1%, it's unlikely to end the day at -2%. If it's down 2%, it's unlikely to end at -3%. At 10 a.m. is the most important inflection point, because the first 30 minutes of trading in the option market, or just in the general stock market as a whole, is the most volatile. So after the first 30 minutes, you get a really good sense of where the market direction is after that point. So once 10 a.m. hits, you can just sell a put option that is about 1% out of the money. So let me show you what that looks like.
So I'm going to show you an example. Let's go to trade SPY options. I'm going to show you 2 different examples right now. So I'm going to sell a put option for April 1st, and this is exactly what I did. And I went for an out of the money option. So I went for the 552 strike price, and this has a 20 delta expiration. Now this option expires in 1 day. I opened it up at the end of the market. So on East Coast time, it was around 3:30. So it's the last 30 minutes of the market, I opened up this trade. And essentially the reason I did that was because I wanted to see what would happen the entire day. And now this option expires the next day. So it's a 24-hour period. So it wouldn't necessarily be technically a 0 DTE trade, but it's essentially a 0 DTE trade that just expires the next day. So it's kind of like a 1 DT/0 DTE. The benefit is, again, you don't have that much time, which is good. That means the entire premium of the option is going to decay within 24 hours. So I personally collected $2,500. So within 24 hours, I'm going to make $2,500. Very attractive, very interesting trade. And again, SPY already has built-in diversification. Now, what you can also do here, let's say that you have a small account, okay? For a big account, it's pretty easy, right? You sell a put option, you go for a lower delta, 20 delta, and either go for the same day. You can open up this position in the morning based on what I told you earlier in that clip that I used from a little bit of time ago, but it was extremely relevant. Or you can go for a next day trade. So you can go for, 24 hours or slightly more than that. But let's say that you don't have all this capital to put up into an SPY position. You don't have, the $50,000. You're not trading with a big portfolio. In that case, what you can do is you can aim for a smaller account trade, and it can be really, really small. So you can turn this trade into just, really $500 trade. Let me show you how you can do that. So essentially you can still do the same trade as me. Like, let's say that you want to go for a 1-day expiration. What you can do is you can essentially sell a put option. Now, I would go a little bit lower than the current price here because the position I'm going to be showing you is going to be a spread, and a spread really is amazing. It has a lot of income that you can collect, but the lower down that you go for a put credit spread specifically, the safer it is, right? It's more out of the money. The more out of the money it is, the less chances that it will go into the money, and going into the money is a bad thing when you're selling a put credit spread. It's collecting income, but you really want the stock or the ETF in this example to stay above the strike price. So instead of the 552, I'm going to go a little bit lower to 550. Now the 550, although is not that much of a difference, it's only 2, it actually is a big difference. And the delta, instead of being 20, is only 14.7. So it's like less than a 15 delta, which actually makes a difference in the grand scheme of things. Like, little bits of money make a big difference, right? We all know that compounds. And reducing risk is also very important because having less risk means you have less assignment risk and less chance of losing money and less chance of this going into the money against you. So I would go a little bit lower. So I'm going to open up the 550. And now what I'm going to do is I'm going to go a bit lower, and now I'm going to buy a put option. So again, I'm selling a put option that's going to be more expensive, and then I'm going to buy a put option that's going to go down to 545. You'll notice right here that if I buy this option, the delta here doesn't matter that much. It's very low delta. So you can see like the chances of SPY going this low was like pretty low. It's 6%. Okay. But the reason why I'm buying this option is because when you sell a 550 and then you buy 545, this creates a put credit spread. So you'll see right here, Robinhood is saying it's a put credit spread. And essentially I'm only putting up $500 worth of capital. But because I'm collecting, $40 or $43 here estimated, I'm really only putting up like $457 worth of capital. And if you do the math, $43 divided by 457 is like literally a 9.5% return. It's almost a 10% return in one day. So you can make 10% daily. Now, again, my thumbnail says 100%. Obviously, like, this can be 100%. Now, obviously, nothing is really 100%, but this has a very, very high chance of profit, especially if you follow the rule that I went over, especially when the market is oversold, especially when you do a 0 DTE trade, the trade that expires the same day and the market has already fallen and you bet on it not falling further. You can get really, really high probabilities. 100% might not be possible, just like nothing's guaranteed in life, but you can get a really high percent. And I mean like 90% plus. And obviously some weeks and months can even be in 100% area. I want to talk about risk management real quick because one big loss can wipe out a lot of gains. And I mean a lot. Like, I've collected $2,000 a day, like 30 days in a row before. And it would be like 60 grand, but then I would have like one big loss, and that big loss would be like negative $30,000 or $40,000. Still a profitable strategy, but I just want you to be aware that it can be more difficult to manage a losing position here. What I typically do is if SPY goes to my break-even price, I am thinking about closing out that trade. I'll give it some time, but obviously it can be very crucial because time is already very low. So if it goes into the money, it's usually going into the money very fast. And typically it's because the market is crashing for some like weird reason. So it's typically like a black swan event, and it's very difficult to manage. So what you want to do is just close the position once it goes into the money. Of course it varies, and I plan to make more daily trades in my Discord community. I'm planning to do this right now because the market is very choppy, and this is a really good way to create and generate income. If you want more strategies like this, if you want to learn about my dog strategy, if you want to learn about rolling options, managing options, I encourage you to check out the first link in the description for my Discord community. I encourage you to check out my description for my Discord community. I hope you choose to use this strategy to generate some income consistently and passively for yourself. I have another SPY strategy video, which you can watch right here.